Chapter 7, Small Business and Entrepreneurship, Economic Rocket Fuel. While launching a new business can provide a number of benefits, it also, like most worthwhile endeavors, involves trade-offs. Before launching a business, you need to make sure that you're willing to give up the perks of corporate life. One of the biggies is paid vacation. As a new business owner, if you don't work, you don't get paid, and you may even need to hire someone to replace you when you take time off. You give up other high-value benefits that you might currently take for granted, such as paid health insurance and life insurance. Perhaps the biggest loss is the stability that comes from a regular paycheck as an employee. No regular job lasts forever. Many people are laid off at the whim of a bad boss, but while you're employed, you can usually count on a stable income. Although it may not be for everyone, the possibility of making it big, the trade-offs are worthwhile for a growing number of entrepreneurs. In this chapter, we're going to review reasons to launch a small business. We'll describe the typical entrepreneurial mindset and characteristics. We'll discuss funding options for small business and analyze the opportunities and threats that small businesses face. We'll also look at ways to become a new business owner and tools that will help facilitate that success, and explain the size, scope, and economic contributions that small businesses make. So why do people start their own business? Well, part of that is they're looking for more financial success. Entrepreneurs risk their time, money, and other resources to start and manage a business, and there's just an incredible amount of personal pride that these entrepreneurs take in being successful. And what's interesting is that in spite of the raging recession that the United States has incurred in recent history, the rate of entrepreneurship has been growing steadily in the United States. And in fact, if you read in some magazines such as Inc. and Forbes, it is this growth in the entrepreneur segment that has really helped to prop our economy. So the reasons behind this increase, well, they're varied, but most people are seeking some greater financial success, which we just talked about, some independence, they like some flexibility, they like a challenge, and they also want to feel like they have more control over themselves rather than if you work for a corporation and you may be more vulnerable to a bad boss. Excuse me. So entrepreneurs have a certain mindset, and to be a successful entrepreneur, you need to think about how to change the world with an incredible idea or service. And additionally, there's so many products out there. What you deliver needs to be the best, and it also needs to have an economic and social impact in terms of changing the way that we think about things. Entrepreneurs should have vision, self-reliance, energy, confidence, tolerance of uncertainty, and a tolerance of failure. So entrepreneurs are wildly excited about their new ideas. They find solutions to old problems, and they develop new products, and they stick to their ideas in spite of the discouragement that they might face from others. So entrepreneurs tend to be very self-reliant. They have an internally, they have just an incredible amount of self-control. They have a deep-seated sense that they are personally responsible for what happens in his or her life. And they also believe that others are responsible for what happens in their own lives. When looking at entrepreneurs, these business owners typically need to do everything themselves, from getting permits to motivating employees to keeping the books to producing the product or service that made them start the business. When things go well, people with an internal locus of control feel that their efforts have been validated. And when things go poorly, those same people feel that they need to do a better job next time. But people with an external locus of control rely less on their own efforts, and they feel buffeted by forces such as random luck and the actions of others, which they believe will ultimately control their fate. Entrepreneurs do not have those characteristics, or do not have an external locus of control characteristic. Entrepreneurs simply can't succeed without an enormous amount of energy. They work 6 or more days in a week, putting in long hours. To be successful, you need to have confidence in your own ability to achieve, and to have confidence in your own products. Now, on occasion, having too much confidence has a downside, as it can cloud an entrepreneur's mind and make them confuse the likelihood of success with reality. Successful entrepreneurs should have the capacity to turn uncertainties in business environments and other risks to their own advantage. And successful entrepreneurs have to be patient in the face of failures and to learn from them. So if you fail the first time, that doesn't mean you stop. Simply means need to maybe step back, figure out what went well, what didn't go well, learn from that experience, and move on. Now, the Blackstone Entrepreneurship Initiative. This initiative was created and built with the idea that it helps people identify segments within the industry or within the business world, that segments that are growing, segments that are declining, so that if you have what you think is just a fabulous idea and you're not sure if there's really a market, you'll want to look here to use this resource to identify whether or not there's a need. For example, the birth rate in the United States is declining. So unless you have a product for babies that is truly new and innovative, that might not be a segment that you want to look at. On the flip side, the United States has an aging population. Having a product that caters to the elderly in our society, there's probably lots of room for innovative new products and services. If you have more interest in this, go check out the Blackstone Foundation. So, funding options for small businesses. Now, all firms have startup costs, and the way to get the money to be able to start your company, well, you have personal resources such as your own bank account. There's obviously your family and possibly friends. There are credit cards. Not recommended, but there are credit cards. You can also look at loans from commercial banks. The Small Business Administration is a fabulous resource for loans and grants. And then peer-to-peer funding is an idea where borrowers and investors combine forces so both benefit. Think of Shark Tank. Other options include angel investors. Now, angel investors provide money in what they view as high growth potential business endeavors in exchange for a share of ownership in the company. For example, if I have a company that I need $100,000 and I approach you for that money, and you might say, oh, I'll give you $100,000, but I want a 50% stake in your company, but I don't want any liability. So that's an example of an angel investor, someone that is willing to help you out, but they want something in return. Now, angel investors, they are looking out for companies that seem likely to grow at 30 to 40% per year. And at the end of a certain amount of time, the company will then be either bought or sold, or it will go public. Now, venture capital firms invest in startup businesses that also have high growth potential in exchange for a share of ownership. Venture capital firms tend to be very visible, much more so than an angel investor. But there are only a small number of new businesses that actually receive venture capital money. In 2012, there was a 10% decrease in venture capital spending due to the uncertainty that was happening in the economy. Now, one of the largest active angel organizations is in New York City, and it's called New York Angels. And they will typically invest anywhere from $100,000 to $1 million in seed and or early stage companies. And they what's interesting about the New York Angels is that it's not a fund, and they do not invest as a group. So it's made up of individual members, and these members will collaborate on due diligence, but they make independent individual investment decisions. So that is another source of possible funding for a startup company. Now, these are some staggering statistics. New businesses it is very, very hard to start a business, and it is very difficult for it to sustain itself. Survival rates tend to decline very, very quickly. So in year one, most businesses, 80% of the businesses will change or survive. In year two, that number drops to 69%. And you can read the chart. Each year that you're in business, it becomes harder and harder, which is why you see these declines. Once you have made it past your 5 or 6 year mark, then the likelihood of you staying in business, it actually goes up. So once you've established yourself, it is much easier to stay in business over time. Now, opportunities for small businesses. One great area for businesses to look at is finding a profitable niche. So a niche is a very small segment of a market, and there's usually fewer competitors than the market has as a whole. For example, in Milwaukee, Oregon, there's Bob's Red Mill, which many of you may have seen their products down the cereal aisle or down the natural food aisle. Now, Bob's Red Mill is a locally owned firm, and this company specializes in grains and flours, but they have a certain market that they're catering to. They're looking for more of a whole foods market, a non-GMO market. And when they started, that was a very small niche in all of the grocery products that were produced. And they carved themselves a very nice market, and they're well known now. Excuse me. So small businesses are able to provide personal customer service and to develop, fabulous relationships with their customers, which also helps to build and sustain loyalty. There are typically lower overhead costs because most entrepreneurs do not hire very many managers or very many specialized employees because they're doing those jobs themselves. And there's opportunities. The internet has become just a fabulous place for entrepreneurs to be able to safely test their market and to get their products out there, especially through online firms like Amazon, where the cost of entry into the market is very, very small. And it's very easy for companies to create, sell, publish, and even manufacture goods and sell them rather than having a presence in a store. Now, what are some threats for small businesses? Well, as we looked at a couple of slides ago, there's a high risk of failure. The entrepreneur or small business owner may have a lack of knowledge and experience in business in general. There may not be enough money to be able to sustain the business for a long period of time. In some business, there can be a larger regulatory burden, and the cost of health insurance is also becoming a bigger issue for small business because insurance premiums are incredibly expensive, and if you're only buying insurance for one or two people, insurance companies tend to charge you more than if you were buying at a group rate. Well, some pros and cons of starting your business from scratch versus buying an established business. Well, to begin with, it's all you. It's your idea. You get to make the decisions. You get to set it up, and you don't have to deal with what the previous owner did. Some cons, guess what? It's still all you. And that's certainly a lot of pressure. There can be too much for you to do just as a single person. And that can make it really hard to direct yourself in the right directions to build that customer base. Sometimes it's hard to get credit from your lenders. And it can also be difficult to secure permits to run your business. It can be hard to hire employees, and there's just a lot of logistics to running a business that can be very challenging. A pro to buying an established business, one, the business is already established, so there's a customer base that's in place. There's relationships with people, there's relationships with suppliers and other stakeholders. And getting financing and credit is less challenging because it is established. Now, on the flip side, when you buy an established business, you're working with someone else's idea, and that can be less fun for some people. And you may inherit some old mistakes that can range from maybe a poor employee relationship to maybe you've inherited a lawsuit. Um, Buying a franchise. So, again, a franchise is a company that you purchase licensing agreements, giving you permission to run, similar to McDonald's, Burger King, Subway, just to name a few. So, some pros to purchasing a franchise. Usually, you're buying your own piece of a well known brand, and it's a proven way of doing business. There is incredible management expertise and support that comes with your franchise package. And franchisors offer not just advice, but also financing to make the purchase possible. And these advantages can add up to a very low 5% first year failure rate versus the 20% of the typical business. Now, some cons: you have a little less opportunity for creativity since you have some pretty strict franchise requirements. And if something goes wrong with a national brand, such as E. coli, your business will suffer too, even though maybe it wasn't your facility. And the initial purchase price can be very expensive. It costs, I know for McDonald's, it's well over $100,000 for one restaurant. And that usually doesn't include the ongoing point of sales royalty fee that you'll be paying every month. Now, becoming an entrepreneur, you can gain a lot by working for someone else in a field that you're interested in. So before jumping into that entrepreneurship role, you may want to get some experience and learn about the industry and make contacts. You want to learn about others. How have people succeeded in this business or industry, and how have they failed? Build those relationships so that you're not making the same mistakes. I cannot stress enough the Small Business Administration. It is a wealth of information for industry statistics, trends, small business regulations, and they can also be a source of funding. They're familiar with grants for minority entrepreneurs or women entrepreneurs, so they're great resources. And finally, as you're becoming an entrepreneur, you need to develop a business plan. So a business plan, what that does is it's a very formal way to describe a business concept. It will outline your core business objectives and provide details and timelines for achieving them. It's your roadmap to success. And a business plan also helps you to maintain focus, and it's absolutely critical for getting outside funding. There isn't a bank around that will fund your business unless you have a business plan. Now, we've talked very briefly about the Small Business Administration. So what are they? Who are they? They're an agency of the federal government that maintains and strengthens the nation's economy. And they do this by counseling, offering help, and protecting the interests of small business owners. And they work with individuals on a daily basis, helping them to be successful. So the Small Business Development Centers, so this is a place where you can actually go, and they provide comprehensive management assistance to small businesses in the form of, help with writing your business plans, helping with loan applications, helping with networking. And again, I just can't emphasize enough how important and what a great resource they are for you as you start thinking about starting your own business one day. Now, the Small Business Association provides counseling from other small business owners that this counseling is available for free. Maybe counseling isn't the right word, consulting is a better word. But you'll meet with other business owners that have been successful. Typically, these people are maybe retired or maybe they've sold their business, but they're a wealth of knowledge and they're willing to give of their time and expertise for free. And definitely something worth taking advantage of. So, what goes into a business plan? Well, first of all, you need to know what type of product or service you're going to be offering and what needs does it fill. If you're making a product that people don't have an interest in, your business will fail. So you want a viable product or service. So some questions to ask. Who are the potential customers? Why are they going to purchase it from you? How are you going to get your product to those customers or make them aware of your product? Where are you going to get the funding to start your business? And when do you expect to be profitable? So in a business plan, all of these components are necessary. You have the executive summary, description of the business, your marketing plan, who your competition is, your operating procedures, who's going to be working in the business. You'll have complete financial data, and that will also include a source of startup money. And in your appendix, you'll have any resources or other documentation that you may need. Now, the SBA defines small businesses as companies with up to 500 employees, including the self-employed. But the SBA also makes it clear that the meaning of small business is different for different industries. So a benefit to running a small business, besides the contribution to the U.S. economy, is that small businesses help to create new jobs, they fuel innovation, and in urban areas, they can really serve to help vitalize inner cities. So this is a quick look at entrepreneurship rates across countries. So it's rather interesting to note that the top 10 entrepreneur rates happen to be on the continent of Africa. So it's a developing economy in the African continent, and people are really, as technology is becoming more and more accessible, there are entrepreneurs that are beginning to offer products and services to communities and societies that previously haven't had them. On the other hand, countries with a very low entrepreneur rate tend to be in the European countries. And some of that is for a variety of reasons. A lot of European countries have a declining population, so there aren't as many people that are starting up businesses. You also have very established companies and very established economies where you have a combination of both free market enterprise and high socialism in those European countries. And in the socialistic countries, the tax rate tends to be higher. So that is a little discouraging for most entrepreneurs, that they don't want to put their heart and soul into businesses and to have, a large percentage of their profits taxed at a very high rate. So those are some reasons why those numbers are so different. So I just went over some of this. There's per capita income. So low income countries have high overall level of entrepreneurship. It doesn't take them very much to get going. And the opportunity costs are lower in countries that have a high level of employment protection, and they have strong unemployment rate. So, and the cultural and political environment can also hinder entrepreneurship by raising barriers. And I think we see some of that in the European countries. So looking back, we've looked at some reasons to launch a small business. We've described what the entrepreneurial mindset is and some characteristics of these entrepreneurs. We've looked at funding for small businesses and analyzed the opportunities and threats that small businesses face. We've also looked at ways to become a business owner and some tools to facilitate their success, particularly by tapping into the Small Business Association, the SBA. We've also looked at the size, scope, and economic contributions of small business, both in the U.S. and throughout the globe. Before we sign off, I would like you to think about an entrepreneur that you admire, and I would like you to write a one-page report about the entrepreneur, and I would like you to submit that in Buzz. So some places to research, I would look at, there's Entrepreneur Magazine that is online. I would encourage you to look at Inc. and use Google as some resources to find some entrepreneurs that run some businesses that you're excited about. Thank you very much for tuning in. Have a great day, and as always, if you have questions, please give me a call. Bye-bye.